Let's get some perspective on hiring prospects for Wall Street, with sales and trading revenue down for a second consecutive year. Joining us now on set with her thoughts is Wall Street hedge hunter Ilana Weinstein. She's the founder and CEO of the IDW Group. And, you know, I've been reading lots of stories over the past couple of weeks about how Wall Street is going to be laying off more and more people. You're in the hedge we just said hedge hunting business, but
that works.
In terms of hiring right now, I'm assuming that business is sadly bad, or no?
Well, we have to bifurcate between sales and trading at the investment banks and the hedge funds.
Right. So
sales and trading revenue is down. It's down by 15 to 30% over last quarter, and I think as more banks announce, we'll see the same sort of numbers down over last year. So hiring is definitely off from what it was when banks needed to rebuild post-2008.
So on a percentage basis, how far down are we in terms of hiring? If I'm a student coming out of business school thinking I'm supposed to be getting a job on Wall Street, my chances are now reduced by what, do you think?
I mean, I think it's less students coming out of business school.
Right.
I think it's more being thoughtful about whether banks really need everyone they have today. And what they are focused on instead are key players who can really be additive to the franchise, salespeople with very deep relationships, and traders who are just great market makers.
Mr. Toomey.
Ilana, well, I sit on the banking committee in the Senate, and I have to say I'm absolutely frightened by the more I see about DoddFrank. The costs that I think it's going to impose, I think it's going to make credit less available, more expensive. I think it actually increases the risk of the failure of a big financial. But do you think that the disparity between the European regulatory model and what we're in the process of doing is causing us to lose some of these jobs on Wall Street?
Absolutely. I think for starters, we obviously are dealing with a much tighter risk environment. There's the overhang of what all this regulation means. So there are meetings upon meetings upon meetings at the investment banks, which is no fun to figure it out.
Right.
When it comes out, there's no... it will cause certain businesses to be less profitable, which will cause those banks to disinvest in those businesses. Prop is basically gone. The last traders basically
we're banning it. They're not.
Right? And as OTC trading becomes more electronic, I think we'll need less salespeople and traders. So there's going to be I believe, a net loss of jobs to the street as a result.
But how many of those jobs are ultimately moving to what people call the shadow banking system, so to other hedge funds and outside of the banks? I mean, you know, we hear about all these prop desks that move from one place to the next.
But that's been going on for the last 10 years, Andrew. Right? The advent of hedge funds hiring from the investment banks, this is not because of Volcker. That's been going on for a long time.
And does this lower their acquisition costs of getting quality people that maybe they wouldn't have had access to before?
For the people that are left that they would still want to hire, yes, because now they need to leave as opposed to that being an option. So that's true.
So do you have people who used to work on Wall Street that are now making life decisions to say, you know what, profits are down, there's more regulation coming, I'm going to take whatever smarts I got in my little head and I'm going to go work in another business? People always said we wanted financial engineers to go become real engineers.
Scientists.
Is there something to be said about that happening today?
I think it's early for that to happen because, look, if you're driven by compensation, you're still going to get paid. You're going to get paid more on Wall Street than you are pretty much any place else. But as you know, the cash to equity ratio is basically been turned on its head. So if you're a senior person, you're no longer getting 25% equity and 75% cash. It's now 25% cash and 75% equity.
Is that changing people's calculus? I mean, now that people can claw back the money, now that the money is not really there. I mean, tell me what does that mean?
I don't think yet.
And do people go to hedge funds because of that? Meaning because there's more cash, people get paid in cash at the end of the year instead?
I think people go to hedge funds because they're. I mean, historically, they are driven by the desire to invest, right? They want to.
Let's also keep in mind, we don't know whether some of these hedge funds get dragged into all of this, right? They could be designated as systemically significant institutions and now be subject to a whole new level of regulation that never happened before. And I think the more likely migration is not from Wall Street to mechanical engineering, but rather to London, you know, where they can continue doing the business they've been doing.
Ilana, thank you. This is very interesting, and we're going to be watching it, obviously, as we continue more and more regulation. We'll see what happens to the jobs.
See, all the things she said about DoddFrank, a lot of the populations can say, hey, it worked. That's exactly what they want.
When credit is more expensive and less available, I don't think people will be big fans.
Coming up, plus more on the phone hacking scandal. Will News Corp be forced to break up its newspaper business overseas? We're going to get the latest from London. And then at the top of the hour, a CNBC exclusive as we talk with Treasury Secretary Timothy Geithner. Squawk Box will be right back.